Time now for Money Power Politics. Tonight, the U.S. bailout of Argentina has been finalized. Treasury Secretary Scott Bessent announced today that the United States directly purchased Argentine pesos as part of a $20 billion currency swap. But he insists the deal is not a bailout. So let's make something clear. Downplaying it as merely a swap agreement, exchanging pesos for dollars to stabilize their economy, well, at the very least, that is not the full picture. Now, we might not be writing a direct $20 billion check to Argentina, but we are still taking enormous risk to help out a friend of the president who's up for re-election in a country that is in trouble. That's this guy right there on your screen, handing Elon Musk a bedazzled chainsaw. And Argentina is not a top trading partner for us. What is this? It is a massive loan. And if Argentina does default, and they may, it is a $20 billion loss for us. The Fed will be left holding a ginormous bag of pesos worth nothing. So you could call it a hidden bailout or a direct bailout. This is a huge win for Argentina, its president, and the group of U.S. investors Secretary Bessent knows very well who bet big on Argentina. So keep in mind, this is happening while the U.S. government is shut down. Thousands of furloughed federal workers are not getting their paychecks this week. So when we hear about America First, know this. This America First, in this instance, is the investor class. That right there is the full picture. With me now, veteran Washington correspondent, my old friend John Harwood. He is also a distinguished fellow at Duke University and a columnist for Zeteo on Substack. And Matt Peterson, back for his second visit to the 11th hour, ideas editor for Barron's. John, what do you think about this bailout? Because it's not exactly black and white.
Well, look, it's not a good thing for a significant country in Latin America to collapse economically. We have bailed out other countries in the past. Bill Clinton did a similar kind of currency bailout for Mexico during the 1990s. But the problem is the one you alluded to. President Trump came in with an America First policy, said we're not looking out for other countries, we're looking out for us. They took a chainsaw to foreign aid. And you also have, with this president, a constant question. Is he doing something in the interest of America, or is he doing something in the interest of a friend, of a crony? And then you layer on top of that Scott Bessent, who has hedge fund pals who have some exposure in Argentina, and you raise a lot of questions. And the final piece of the puzzle is the one you mentioned about Argentine farmers. They're the ones who are getting that Chinese money from purchasing soybeans that our farmers are not getting. So it's probably not the highest profile story, so you don't know how many people are aware of it. But the more people are aware of it, I think the less they're going to like it.
Well, you know what'll make it a high profile story is if we cover it. What does this bailout mean for us?
Well, it means we are now tied at the hip to Argentina, a country that has defaulted 9 times on its debt. We're now making them a loan. This is why people who run hedge funds, like Scott Bessent used to do, love to bet on Argentine debt, because there's lots and lots of money to be made, and there's lots of people out there trying to do it.
And there's lots of money to be lost.
Yeah.
Can you just speak to John's point? How does this align with the mantra, with the game plan for this administration that's America First, America Alone? I mean, if you were one of the former USAID employees, how are you not looking at this and saying, what?
Yeah, I think you're tearing your hair out if you're one of those folks. I think you're tearing your hair out if you're a soybean farmer in this country. Those folks learned today that they are not going to get any assistance from the U.S. government until the shutdown ends. So what's in it here? You know, the Trump administration is pretty overt about this. They're helping out a political ally. So if you're a political supporter of the president, maybe this is great for you. But if you're here working in this country, you're just trying to save money, there's not a lot in it for you.
John, this bailout is happening amid growing concerns about our own economy. The Wall Street Journal kind of broke it down today. Tariffs are up, debt has ballooned, and DOGE really didn't do much. The president promised to rebuild the economy. Is he anywhere close to that goal?
No. He's taken the economy backwards. Deficits are up, as you mentioned. The economy is slowing, and we're in this potentially very difficult squeeze where the job market is deteriorating. And so you want to stimulate the economy to help with, say, Fed rate cuts to help people stay employed. But on the other hand, inflation has been driven up to some degree by the tariffs. And so stagflation is what comes out of that equation. So it's very difficult for the Fed to manage, very difficult for the Treasury to manage. And this is a president who has not put the economy first. He's put his idiosyncratic tariff policy in place, which has been very chaotic. And it's not a good picture for the United States. And one of the problems right now is that we're not getting economic data because of the government shutdown, because of the cloud that the president cast over the honesty of government data by sacking the head of the BLS.
Okay, that's exactly what I want to talk about next, and I want to lay this out, because in normal times, we would be getting important numbers on inflation and employment next week, numbers that the Fed relies on. But the shutdown, of course, is throwing all of this into an economic data blackout. Now, the New York Times is reporting tonight that the BLS will still release CPI, Consumer Price Index, for September. But otherwise, we're flying blind, right? And again, the average person might be like, what do I need with the CPI? But the Fed certainly does.
The Fed certainly does. That's right. So we might get a little bit more data out of the government, but we're not collecting new data. So as this economy keeps changing, as stuff happens like big international trade deals that we keep hearing about all the time, we're not learning how those are affecting us, right? We are not giving the Fed the data that it needs to. It wants to cut rates. The Fed is out there saying, basically, please give us the data.
We're going to give you what you want. Just give us the data.
Exactly. And they're not going to get it. That's absolutely right. And particularly things like inflation are really, really hard to know what's going on big picture in the economy if you don't have, civil servants out there trying to parse through this for us.
I want to share a bit. JP Morgan CEO. Yes, John?
I was going to say, we do have some private sector sources of data, but they're not always as accurate as the government data. Last week, we got figures from ADP showing a loss of private sector jobs, 32,000. Often ADP is off when we get the subsequent numbers from the Labor Department, and we don't know. We are flying blind to some degree.
Jamie Dimon today warned about these economic risks ahead and how the market might be ignoring it, underpricing it. Watch this.
I am far more worried about that than others. So if you said, I'm talking about probabilities, I would give it a higher probability than I think is probably priced in the market and by others. Yeah. So if the market's pricing in 10%, I would say it's more like 30. And I'm not saying
one-third chance of a correction.
Yeah, and I'm not saying next year. Because the timing of these things is almost impossible to figure out.
So it could be what, 6 months? Could be a year?
Could be 6 months. Could be 2 years. The amount of uncertainty, and I put geopolitics in that category, fiscal spend in that category, politics in that category, the remilitarization of the world in that category. All these things cause a lot of issues that we don't know how they're going to sort out. So I say the level of uncertainty should be higher in most people's minds than what I call normal.
Are investors underestimating the risks we face ahead? Because right now the market keeps going up and up and up, and in a fear of missing out, people don't want to sell.
Yeah, there's a weird thing going on right now, which is that gold is going up and getting more expensive at the same time that stocks are getting more expensive.
Very rare.
Which are two things you don't see happening because you buy gold when you're worried. And right now people are worried, but they're still going to make a bet on stocks going up. So basically Wall Street's doing really well, but it's not clear that they're actually doing it because they think the economy is getting better.